when fund is allocated to head, it is referred to as a vote. And we talk about vote book that it is a way whereby expenditure is being controlled by the authorized officer in charge of that vote. So it is just a kind of fund that it has to be voted for before the expenditure will be incurred. Then we have edge. What is edge is the code given to each item of government revenue and expenditure in order to control and monitor them. So we have, there are some code whereby there are some expenditure and revenue which the government department generates, which must be classified as edge, like edge 1. Revenue was receipt of amount will be classified under that edge. So likewise, we have a budget. What is budget? This is the financial plan of action expressed in monetary terms, showing the estimated receipts and payments usually a year. And we have government they prepare budget every year, which show the government financial plan on how they incur the expenses and also how to get the revenue and disburse that revenue, which is usually a year. So that is that on budget. Then let's quickly go to preparation of a personal cost budget. So cost of budget is prepared to show the analysis of the basic salary and allowance of the staffer in each government ministry and department in a particular year. This is just a kind of budget to show the base salaries of each government workers and the allowance which will be deducted at the end of the year to know the amount of money that the government will spend on the personnel cost, on the salaries and wages of the government worker. Now, there are some steps, there are some things that we need to know under personal cost budget. There are some cases or instances whereby there are some things that we definitely imagine that we will have to do the calculation on. Then let's quickly go to that is what we call annual increment rate. Let's talk about annual increment rate. There is a particular formula for the cost budget. You will be given in the question. Like number 1, if the officer are not on first step of their salary, that means they are not given promotion, but they just said, you assume that that particular post that they are or level, maybe level 12, level 10, then they should start with a particular level. So these are the instances where we have the annual increment rate. When, like for example now, you are in level 9 and you are promoted to level 10, you may ask you to start from the step 5 or step 6, depending on the ministry. So in this case, if you are given that if the officer are not on first step, that means when they are given promotion, they are not told to start with step 1. It will be given in the question. So if that such case happen, the formula is a new step. That is a new step will be given in the question, -1. And when there is when you are in a particular level, when you begin to climb the step, then there will be increment in the salary. So we will be given new step -1, the increment rate that attached to that step plus the basic salary. Basic salary, and we also have allowance as well. So let's quickly look at this question. Position, number, grade, salary. Director, we have a position of director, and look at the salary of director. That is how many numbers of the director general the department. That department he has only one director general, and the grade level of that director general is 17. And let's see the basic salary and the increment. The base salary is 300,000, while the increment salary starting from step is 50,000 naira. Then looking at the director, we have a 4 director in that department, in that ministry, and the grade level with the director is 16. level 16. And looking at the base salary is 200,000, while the increment from the starting from the step is 30,000. And you are assuming they are to be on step 3. So if you are given this kind of question, this is how you go about it. The new step which is given in the formula will be represented by step 3. That was step 3 minus 1 times the increment rate plus the basic salary. So let's quickly do the calculation and see how it goes. So assuming they are to be in on the step 3, like I told you, so this is how we do the workings. Director General. So don't forget the formula. New step minus 1 incremental rate plus basics salary. So let's start it with Director General. Looking at the illustration, Director General level, new step, assuming new step, so the step is 3 minus 1. Then increment rate, look at it, you see the increment rate, which is 50,000 naira. Then you now add it with your base salary, which is 300 naira. Add it with salary, which is 300 naira. So that is 250,000 plus 300 naira. 300,000 naira. So this is 100,000 plus 300,000. That is so the total package for Director General based on step 3 is 400,000. But the problem is that you see that the number is we have only one person in the post of Director General. Adibin it is so since it is 1, you just times it times what? one person, and that is 400 naira. If it is 2, you times it by 2. That means the number of the persons that are in Director General that acquire the position of Director General. Now let's go to the next one, which is directors. So we have 4 directors here, and don't forget the formula, which is because we are told assuming they are to be on step 2, so they are placed on step 3. So this minus 1, increment salary is 30,000 plus 200,000 basic salary. So you add it, you see 2 plus 200,000. So we have 60,000 plus 200,000. So you have 260,000. Now, how many people are in that? How many numbers are in position of director? There are 4. So you multiply it by 4. So the total budget cost for it is 1,040,000 naira. So you have this amount. So that is the cost budget for this. Now, 2. When we look at 2, another instance is that when employer are on step 1, when the employee are on step 1, here, this what we do is that since they are not on step 3, they started from step 1, you don't need this formula. What we just need to do is to write the basic salary directly, because here they said they should place the employee on step 1, not on step 3. If it is step 3, you use the formula we used the other time. So, but this one said they start from the step 1, so you don't need any formula at all. So what we just do is that, and looking at this, you see that these are the illustration. They say all employees on 4 steps of their salary. So you are required to prepare the personal cost budget for the year. Now, what I'm going to do here is that let's see remember they have allowances, and these allowances are grade level 12 and above. They have allowances of 8 housing, which is loans, which is allowed to them, of which they are going to deduct from their salary, which is 8,400 per annum, 625 per annum, and the other. So how do you go about it? Don't forget it is on step 1. So if you are given question on the step 1, you don't need any formula at all. What we just do is that we start with the workings. We are given the post of Director General, we are given Director, Chief Accountant, Accountant, Executive Officer, Messenger, and we have laborers. So there are just 7 in number. So let's start from the Director General. Director General. So let's go straight to their basic salary. Since there is no increment here, what we just do is that their base salary is 40,000 naira. Then look at the housing. Their housing, and that is very important. Sorry, this big salary is 40,000. Then look at the housing. The housing is 8,000, because here in housing they said grade level 12 and above. Their housing is 8,400 per annum, and transport is 6,250 per annum. So you just write 84. So because Director General fall within that range. So transport, which is 6,250. So I haven't done that because this is just the working. We